Let us move ahead and take up the next question for our practice. That will be question number 10. Let us read this question. STS Limited, which sells on credit basis, has ranked its customers in categories 1 to 5 in order of credit list. So we have category 1, 2, 3, 4, 5. Bad debt percentages have been given and average collection period has been given. Further informed in the question, the company's current credit policy is to allow unlimited credit to firms in categories 1 to 3, limited credit to firms in category 4, and no additional credit to firms in category 5. As a result, orders amounting to rupees 25 lakhs from category 4 and rupees 75 lakhs from category 5 customers are rejected every year. STS Limited makes a 10% gross profit on sales and has an opportunity cost on investment in receivables of 12%. What would be the effect on profit of allowing full credit to all categories of customers should credit be extended to all categories of customers? Now friends, when you are solving a question like this, again it's a very good question. If you observe what is the type of this question, so the customers of this company have been classified into 5 categories depending on their payment pattern. Okay, so category 1, 2 and 3, they are maybe prompt payers and companies therefore giving full credit to these customers. So logically this question is not about customers in category 1, 2 and 3. That we are sorted already. We are having a trouble because we are giving limited credit to firms in category 4. That means a customer coming from category 4 type of firm, we will evaluate, okay, this is category 4 customer, we will not give full credit to this customer. Okay, we'll see how much is your order, dear sir, dear ma'am, how much is your order? Okay, you want goods of 3 lakhs? Fine, we will currently give you goods of 1 lakh. Okay, because you are very slow in payment, we will give you only 1 lakhs and please you become prompt in payment and then we'll give you complete sales. So out of 3 lakhs of orders, we accepted order of 1 lakh, we have rejected order of 2 lakhs. Then we have another customer coming up and we find from our record, oh, you are category 5 customer. Dear sir, we have a humble request. Please clear off your earlier dues and then come to us for seeking any further orders. We are sorry that we will not be able to provide any sales to you at present moment. We are really very sorry. We are very ready and very happy to serve you always, but please clear your earlier dues. And then, so what happened? This customer came with an order of 5 lakhs of rupees. We rejected the entire order because we are having a fear that this customer won't pay only. Now, we are rejecting orders. Which category we are rejecting orders? Category 4, category 5. In category 4, limited orders are accepted and limited orders are rejected. In category 5, all the orders are rejected. Now, the company, that is STS Limited, is coming up with a new strategy. What if we accept all the orders and we have extensive sales? You know, 25 lakhs of additional sale will start happening from category 4 customer and 75 lakhs of additional sale we will be having from category 5 customer. That means 1 crore of additional sale we can have. So whether we should extend the credit to all categories of customer or a particular category of customer, we have to evaluate. And how do we evaluate? By making comparative profitability statement. But don't be foolish while solving this question. Category 1, 2, 3, 4, 5 doesn't mean that you have to make profitability statement for 5 different categories of customers. I am telling you, category 1, category 2, category 3 already sorted. We don't have to take any decision for them. We have to indeed take decision for category 4 and category 5 only. Therefore, your focus point should be purely category 4 and category 5. So you just make a double column comparative profitability statement for category 4 and 5 and then you evaluate, and then we can conclude what is the question asking you. So let us see how to present the solution over here. In your solution, what you will do is you will first begin with profitability statement including additional profits from customers in category 4 and 5 if full credit is extended to these customers. So as I told you, just make 2 column statement, that is for category 4 and category 5. Credit period 90 days and 120 days. Additional sales will be 25 lakhs and 75 lakhs, that is already informed to you. Cost of goods sold will be 90% of sales. Cost of funds blocked. How to compute this cost of funds blocked? I'll show the detailed workings. And then bad debts, already given to you certain percentage of sales. So in this category 4, it is 5% of sales. So 5% of 25 lakhs will give you 1,25,000. In category 5, it is 10% of sales, so it will be 7,50,000. We have all the figures readily available. So net benefit, if you compute A minus B minus C minus D, it is a positive net benefit of 57,500 in category 4 and a negative net benefit of 2,70,000 in category 5. Let us move ahead and take the calculation further with respect to cost of funds blocked for category 4. So it will be cost of goods sold into 90 by 360 into 12%, and that gives you 67,500. Again, I am telling you, taking 360 days or 365 days is all okay. Unless question gives you specification, you are free to take 360 or 365 days. Cost of funds blocked in category 5 in the similar way. Let us move ahead and now plot the conclusion over here. The very first point of conclusion I would write as extending full credit to all categories of customers will result into additional profit of 57,500 minus 2,70,000, and that will give you on a net basis negative 2,12,500. That is loss of 2,12,500. So extending credit to all categories of customers is definitely a loss making thing, and the company should not extend credit to all the categories of customers. However, if you look into the breakup of this overall loss, there is one component of profit that is emerging from category 4 customer and a big component of loss that is emerging from category 5 customers. Friends, have you noticed one thing? If you have vision like what I have, without even solving the question, you could have concluded that the question says that the company has 10% profit margin and the bad debt percentage from category 5 is 10%. That means all your profit will become bad debt. If you incur a single rupee of cost of funds blocked in category 5, will start giving you loss in that category. So it was known from the beginning that category 5 customers are never going to be giving you any contributing profit at all because of huge bad debt percentage and huge amount of funds blocked getting over there. Not profitable at all. However, if we go for selective approach, we would say that extending that credit to category 4 is a wise decision. So henceforth, what should be the change in our policy? Compare the present policy and proposed policy. Present policy, unlimited credit to customers in category 1 to 3, double thumbs up. That is, the company should continue. Next thing, category 4, you are giving only limited credit. This is what we are asking the company to change. We are now suggesting the company that stop doing this rejection of sales from category 4, accept all orders from category 4 henceforth. Category 5, company was rejecting all the orders, double thumbs up again. What company was doing, let it do. That means what company was doing with respect to customers in category 1, 2, 3 and 5, let the company do that. One course of action that we are asking the company to change, it is stop rejecting the orders from customers who belong to category 4, start accepting their orders and start giving them the credit what they are asking for, because this will enhance your overall profit by rupees 57,500. And let us write up the remaining part of the conclusion. The company should prohibit extending the credit to category 5 definitely. However, it should extend full credit to customers in category 4. By this, the additional profit will be rupees 57,500. Let us move ahead and take up the next question for practice. That will be question number 13. Let us read this question. Star Limited, manufacturers of color TV sets, are considering liberalization of extending credit terms to 3 of their large customers A, B and C. The credit period and likely quantity of TV sets that will be lifted by customers are as follows. Look at the pattern of the quantity. Customer A, you give this customer 0-day credit, 30 days credit, 60 days credit, 90 days credit. This customer is not having any change in the quantity. That means this customer wants only 1000 units in the period. Whether you offer this customer any credit or no credit, it doesn't matter at all. So what will be the wise thing to do for customer A? You should not give any credit to customer A, because even if giving 0 days credit, the customer is still purchasing the same quantity. As far as other customers are concerned, B and C, you notice one thing: the more and more credit you offer, the more and more quantity they buy. That means customers in B and C, we will evaluate individually what credit period we should offer to them. Let us read the other information in the question. The selling price per TV set is rupees 9,000 and expected contribution is 20% of the selling price. The cost of carrying debtors average 20% per annum. You are required determine the credit period to be allowed to each customer, assuming 360 days in a year for calculation purpose. Now in this question they have emphasized that you should take 360 days in the year. So here you cannot take 365 days. And then they are asking you what other problems the company might face in allowing the credit period as determined in A above. So friends, when you are solving a question like this, what you will do is make separate evaluation for customer A, B and C. So for customer, we don't need any calculations. It is visible over there that the quantity purchased by this customer is not increasing by even a single unit. Even if you are offering 90 days credit, no change in the quantity. So the biggest motive for you to extend credit is what? That people should buy more quantity. If the customer is not buying more quantity, why should you provide any credit? So we would say customer A, we will not provide any credit. That means customer A will be purchasing all your goods for cash. For B and C, we will have an independent evaluation by making comparative profitability statement for each customer. So it will be customer wise evaluation. So when it comes to customer A, I have already concluded the matter. When it comes to customer B, we will make a 4-columnar profitability statement on comparative basis with credit period as 0 days, 30 days, 60 days, 90 days, and we will work out profit on each column, and then finally we look into which is the maximum profit that we get, we go with that. And same thing we will do for customer C as well. Once we get to know what is the profit position in each case, we will conclude the scenario of each case, and on the final conclusion once we draw, then we will write the answer for this B part of the question, as in what other problems the company might face, and we will get to know as an implication of first part that what kind of problems the company will be facing in the second part. So let us not talk about those problems right now until we conclude the first part. So let us see how to write up the answer for this first part. And here, analyzing appropriate credit policy for customer A, the quantity demanded by this customer does not change with the changes in credit period. Therefore, for maximization of profit, no credit should be offered to customer A. Let us move ahead and write the solution further. Analyzing appropriate credit policy for customer B. For customer B, obviously what you will have to do is comparative profitability statement with 4 different credit periods as 0 days, 30 days, 60 days and 90 days. So it's very simple. You can plot the amount of sales, you can identify cost of goods sold, and you can also identify the cost of funds blocked. And how to compute this amount of cost of funds blocked, I'll show you. There is no information about bad debts in the question at all, so we don't have want to insert that bad debt line also in our calculation. So your net benefit over here will be simply A minus B minus C, and based on the maximization of your profit, we would say that customer B should be given 90 days of credit, because out of these 4 profit figures, the highest profit is 36 lakhs, which is arising in 90 days credit. So conclusion for customer B, we would write over here itself. Profit can be maximized by extending 90 days credit to customer B. Let us move ahead, and now what we do is we work out the cost of funds blocked calculation for this customer B, and for 30 days credit period, then for 60 days credit period, and then even for 90 days credit period. I don't have to explain you this. This is just the repetitive type of calculation. Let us move ahead and now make the calculation for customer C, that is analyzing appropriate credit policy for customer C. Of course, we have to do this by making comparative profitability statement with 4 different columns: 0 days, 30 days, 60 days and 90 days. And for 0 and 30 days, basically you just have to put dash and dash in all the columns. For 0 and 30 days, all the figures will be nil. This customer will buy from you only when you give 60 days of credit as minimum. But you can see one thing clearly, that your profit is getting maximized only when you give 90 days of credit, and therefore 90 days of credit to customer C will be allowed. Let us move ahead and work out the same working, that is cost of funds blocked for this customer C for 60 days and 90 days of credit. Now let us try to conclude the whole scenario. What is the scenario that we have observed? Customer A will not be given any credit. On the other side, customer B and C will be given 90 days of credit. That is what we have decided. Now this is not going to be an easy thing for you. Why? Because you are not having uniform credit policy for your customers. That means looking at the customer, you are fixing a credit policy. This may not be justified unless you do something more to justify the same, because this is definitely going to come up with some problem, and that is where that B part of the question was asking about what problems the company might face. Now look at one thing. If you are customer A, if I am company and you are customer A, won't you feel bad about this scenario that I am giving you no credit whereas I am giving 90 days of credit to customers B and C? Of course you will not like that. What you will have or what you will demand from me, you are actually making all cash purchases from me. What can motivate someone to make purchases on cash? That is one thing, cash discounts. Notice one thing, customer A is not interested in taking that extended credit, because if you ask that customer to have 90 days of credit, the customer still buys the same quantity, 1000 units. The quantity is not changing, and customer is okay to buy the product on cash basis also, but this customer should be motivated enough. Otherwise, some students might have thought that we might have lost customer A. If you don't take care at this point, definitely you may lose a customer like customer A. Not happy with company's credit policy, that company is inconsistent with the credit policy. On the other side, there will be yet another possible conflict. Can you notice one thing? Customer B and C, in terms of credit period, they both are given 90 days credit, but customer B is buying more quantity. A customer who purchases more quantity from the company will definitely seek some different type of discount known as trade discount. In fact, let me remind you, when you first started learning accounting, you came across two types of discounts, cash discount and trade discount. Trade discount is generally offered for bigger volume of sales, whereas cash discount is offered for motivating the customer to make the prompt payment, or payment before the due date, or payment on the spot when the goods are purchased. So these concepts of discounts that you have learned need to be applied over here, because this is the right situation where you will have to analyze this situation, giving the right answers, fitting cash discount and trade discount at the right places, and you should offer these to your customers. In fact, before the company is facing this problem of these customers coming and demanding these kind of discounts, it could be a wise thing that company itself should call these customers and make customer A sit in front of me, first offer him a cup of coffee and tell customer A, do you know, I'm so glad that you have been purchasing goods on cash, and customer A, we are giving credit to other customers, but you don't seek any credit from us, but we are not having a good feel about this. We feel that we should give you some benefit from our end, and let us decide a certain percentage of cash discount, so that you should be benefited for the payment that you are making on the spot when you are buying the goods. So henceforth, customer A, you will be given so much of cash discount from our side. Thank you so much for joining us for coffee. Then we'll separately call customer B and tell that customer, we'll offer him a cup of tea. Coffee I just had with customer A, right? So now I'll offer customer B a cup of tea. I'll also have that tea with me, and customer B, I'll tell that customer that, see customer B, you are a great customer for us. You are buying bulk quantities and we feel that we should be giving you some additional benefit because of this. That additional benefit, let it be in the form of some quantity discounts. So henceforth, instead of you paying the entire amount of invoice, we will be giving you reduced price for all your purchases ahead. You can just enjoy that price reduction. Henceforth, we will give you that quantity discount or trade discount. So that is my way of dealing with people, that if something I have to do, I'll call these people and do that from my side only before they ask for, so that I get to have that advantage of doing something without somebody asking. It creates a very good impact on other people's psychology about what type of person you are. Anyway, that was me, and how you write up this answer will be like this. The company might face the following problems because of varying credit terms. Number 1, for 90 days of credit, customer B is purchasing higher quantity as compared to customer C. For this reason, this customer might demand some trade discounts or quantity discounts. Customer A is not offered any credit period and this customer makes all cash purchases. Customer A might claim cash discount.